The news represents great profit opportunities for Forex traders. By news, we mean various economic data releases. Every major economy regularly publishes statistics like GDP, inflation, unemployment rate, etc. If you trade Forex during the times of these releases, you have a chance to make a lot of money. In this video, we will get to the bottom of trading on news and economic releases. There are several strategies you may use. Before going into details, if you haven't subscribed to our YouTube channel, subscribe to the channel quickly so that you can receive every new video in a timely manner. One of the great advantages of trading currencies is that the Forex market is open 24 hours a day, 5 days a week from Sunday 5 p.m. until Friday 4 p.m. Eastern Time. Since markets move because of news, economic data is often the most important catalyst for short-term movements. This is particularly true in the currency market, which responds not only to United States economic numbers but also to news from around the world. Here, we look at which economic numbers are released when which data is most relevant to Forex traders, and how traders can act on this market-moving information. Which currencies should be your focus? With at least 8 major currencies available for trading at most currency brokers, there is always a piece of economic data slated for release that Forex traders can use to make informed trades. In fact, 7 or more pieces of data are released almost each weekday, except holidays, from the 8 major most followed countries. So for those who choose to trade news, there are plenty of opportunities. The 8 major currencies are familiar to most traders. 1. US dollar, USD. 2. Euro, EUR. 3. British pound, GBP. 4. Japanese yen, JPY. 5. Swiss franc, CHF. 6. Canadian dollar, CAD. 7. Australian dollar, AUD. 8. New Zealand dollar, NZD. And there are many liquid currency pairs derived from the 8 major currencies. 1. Euro versus USD. 2. USD versus JPY. 3. AUD versus USD. 4. GBP versus JPY. 5. Euro versus CHF. 6. CHF versus JPY. Currencies that can be easily traded span the globe. This means that you can handpick the currencies and economic releases to which you pay particular attention. But as a general rule, since the United States dollar is on the other side of 90% of all currency trades, United States economic releases tend to have the most pronounced impact on Forex markets. Trading news is harder than it may sound. Not only is the reported consensus figure important, but so are the whisper numbers, the unofficial and unpublished forecasts, and any revisions to previous reports. Also, some releases are more important than others. This can be measured in terms of both the significance of the country releasing the data and the importance of the release in relation to the other pieces of data being released at the same time. When are key news releases? Figure 1 lists the approximate times, Eastern Time, of the most important economic releases for each of the following countries. These are also the times that players in the Forex market pay extra attention to the markets, especially when trading based on news releases. Country currency time, Eastern Time. United States USD 8:30 to 10 a.m. Japan JPY 6:50 to 11:30 p.m. Canada CAD 7 o'clock to 8:30 a.m. UK GBP 2 o'clock to 4:30 a.m. Italy Euro 3:45 to 5 a.m. Germany Euro 2 o'clock to 6 a.m. France Euro 2:45 to 4 a.m. Switzerland CHF 1:45 to 5:30 a.m. New Zealand NZD 4:45 to 9 p.m. Australia AUD 5:30 to 7:30 p.m. What are the key releases? When trading news, you first have to know which releases are actually expected that week. Second, knowing which data is important is also key. Generally speaking, the most important information relates to changes in interest rates, inflation, and economic growth, like retail sales, manufacturing, and industrial production. 1. Interest rate decisions. 2. Retail sales. 3. Inflation, consumer price or producer price. 4. Unemployment. 5. Industrial production. 6. Business sentiment surveys. 7. Consumer confidence surveys. 8. Trade balance. 9. Manufacturing sector surveys. Depending on the current state of the economy, the relative importance of these releases may change. For example, unemployment may be more important this month than trade or interest rate decisions. Therefore, it is important to keep on top of what the market is focusing on at the moment. How long does the effect last? According to a study by Martin D.D. Evans and Richard K. Lyons published in the Journal of International Money and Finance 2004, the market could still be absorbing or reacting to news releases hours, if not days, after the numbers are released. The study found that the effect on returns generally occurs in the first or second day, but the impact is seen to linger until the fourth day. The impact on the flow of buy and sell orders, on the other hand, is still very pronounced on the third day and is observable on the fourth day. How to actually trade news. The most common way to trade news is to look for a period of consolidation or uncertainty ahead of a big number and to trade the breakout on the back of the news. This can be done on both a short-term basis, intraday, or over several days. Let's look at the chart as an example. After a weak number in September, the euro was holding its breath ahead of the October number, which was to be released to the public in November. In the 17 hours before the release, euro versus USD was confined within a tight 30 pip trading range. A pip is the smallest measure of change in a currency pair in the Forex market, and since most major currency pairs are priced to 4 decimal places, the smallest change is that of the last decimal point. For news traders, this would have provided a great opportunity to put on a breakout trade, especially since the likelihood of a sharp move at this time was extremely high. The table illustrates shows with 2 horizontal lines forming a trading channel, the indecision and uncertainty leading up to October non-farm payroll numbers, which were released in early November. Note the increase in volatility that occurred once the numbers were released. I mentioned earlier that trading news is harder than you might think. Why? The primary reason is volatility. You can be making the right move, but the market may simply not have the momentum to sustain the move. Let's look at the chart as an example. This chart shows activity after the same release as the one shown in Figure 2, but on a different time frame to show how difficult trading news releases can be. On November 4, 2005, the market had expected a payroll increase of 120,000 jobs, but instead the U.S. economy gained only 56,000 jobs. The disappointment led to an approximately 60 pip sell-off in the dollar against the euro in the first 25 minutes after the release. However, the dollar's upside momentum was so strong that the gains were quickly reversed, and an hour later, the euro versus USD had broken its previous low and actually hit a 1.5-year low against the dollar. Opportunities were plentiful for breakout traders, but bullish momentum in the dollar was so strong that such a bad payrolls number failed to put a sustainable dent in the currency's rally. One thing you should keep in mind is that, on the back of a good number, a strong move should also see a strong extension. The chart shows that, while the worse than expected non-farm payroll numbers sent the euro versus USD rate upward for a short period of time, the strong momentum of the US dollar was able to take control and push higher. Keep in mind, when the euro versus USD rate falls, the US dollar is going upward, and vice versa. Trading news with exotic options. One potential answer to capturing a breakout in volatility without having to face the risk of a reversal is to trade exotic options. Exotic options generally have barrier levels and will be profitable or unprofitable based on whether the barrier level is breached. The payout is predetermined and the premium or price of the option is based on the payout. The following are the most popular types of exotic options to use to trade news releases. Double one-touch option. One-touch option. Double no-touch option. A double one-touch option has 2 barrier levels. Either one of the levels must be breached prior to expiration in order for the option to become profitable and for the buyer to receive the payout. If neither barrier level is breached prior to expiration, the option expires worthless. A double one-touch option is the perfect option to trade for news releases because it is a pure non-directional breakout play. As long as the barrier level is breached, even if the price reverses course later, the payout is made. A one-touch option only has 1 barrier level, which generally makes it slightly less expensive than a double one-touch option. The same criterion holds. The payout is only made if the barrier is breached prior to expiration. This is a good option to buy if you actually have a view on whether the number will be stronger or weaker than the market's consensus forecast. A double no-touch option is the exact opposite of a double one-touch option. There are two barrier levels, but in this case, neither barrier level can be reached before expiration, otherwise the option payout is not made. This option is great for news traders who think that the economic release will not cause a pronounced breakout in the currency pair and that it will continue to range trade. The bottom line, the currency market is particularly prone to short-term movements brought on by the release of economic news from both the US and the rest of the world. If you want to trade news successfully in the Forex market, there are several important considerations: knowing when reports are expected, understanding which releases are most important given current economic conditions, and, of course, knowing how to trade based on this market-moving data. Do your research and stay on top of economic news, and you too can reap the rewards.